Ladies and gentlemen, good day and welcome to the investor call of Cigniti Technologies Limited to discuss the Q2 and H1 FY2024 results. Today, we have with us from the management, Mr. Srikanth Chakhilam, Chief Executive Officer, Mr. Krishnan Venkatachari, Chief Financial Officer, Mr. Vinay Rawat, Chief Revenue Officer, Mr. Raghuram Krovedi, Chief Delivery Officer, and Mr. Sriram Vedam, Chief Marketing Officer, and Mr. Veerapedi Patlola, Global Head of HR. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Smith Shah from Adfactors PR. Thank you, and over to you, sir.
Thank you, Nirav. Good evening, everyone. Before the call, we would like to point out that certain statements made in today's call may be forward-looking in nature, and the disclaimer to this effect has been included in the earnings presentation shared with you earlier. The investor call may contain forward-looking statements based on the currently held beliefs and assumptions of the management of the company, which are expressed in good faith and in their opinion reasonable. Forward-looking statements involve known and unknown risks, uncertainties, and other factors which may cause the actual results, financial condition, performance, or achievements of the company or industry results to differ materially from the results, financial conditions, performance, or achievement expressed or implied by such forward-looking statements. The risk and uncertainties relating to these statements include, but are not limited to, the risk of expansion plans, benefit from fluctuations in our earnings, our ability to manage growth and implement strategies, competition in our business, including those factors which may affect our cost advantage, wage increase in India, our ability to attract and retain highly skilled professionals, and our ability to win new contracts, changes in technology, availability of financing, our ability to successfully compete and integrate our expansion plans, liabilities, political instability, and general economic conditions affecting our industry. Unless otherwise indicated, the information contained herein is preliminary indicative and is based on the management information, current plan, and estimates. With this, I now hand over the call to Mr. Srikanth Chakhilam for the opening remarks. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and thank you for joining us for Cigniti's second quarter earnings call. I'm pleased to report on the company's performance for the second quarter. I'll begin with some key highlights. In Q2, the company achieved a revenue growth of about 2.8%, which reflects our continued efforts to drive sustainable growth in a dynamic and competitive market. I'd also like to report that our EBITDA margins have moved to about 14.3%, underscoring our commitment to financial operational efficiency and disciplined execution. Also, I'm delighted to share that the board has declared an interim dividend of rupees 3 per share, demonstrating our commitment to returning value to our shareholders. This is a testament to our financial stability and also our confidence in the trajectory of our business. On the business front, Cigniti continues to make good progress on the digital engineering side. We've added about 9 new accounts this quarter and successfully proliferated into several key accounts, which is a testament to our differentiated capabilities and also the trust clients place in us to deliver value. Our dedication to staying ahead of technology advancements is evident in our ability to secure and deliver on 2 significant deals with potential to expand. This is in the banking space in the US and also a retail account in the UK. These wins demonstrate our deep expertise and also our ability to solve complex challenges for our clients. We anticipate that the growth from these deals will start to reflect in the upcoming quarters to further strengthen our revenue streams. And on the business outlook, we generally continue to be cautiously optimistic. but we also acknowledge that there is a slight amount of increased spending in the technology sector, which could be viewed as a leading indicator for other verticals to follow. While Cigniti's tech exposure is relatively low compared to other sectors, we see this as a trend for overall positive sign for the industry's health and also potential future opportunities for us. We will continue to adapt to market dynamics, seize new opportunities, and provide value to our clients, employees, and shareholders. We remain committed to a strategy of going beyond our traditional business and continue to remain committed to the strategy of diversification and investing in digital engineering and while maintaining operational efficiency. Thank you for the ongoing support, and we look forward to updating our progress in the upcoming quarters. With this, I hand it over to Mr. Krishnan to go about the specifics of some of the financials.
Yeah, thank you, Srikanth, and very good evening to the members who have been logged into the call. And it's been as announced earlier that the Q1, Q2 will be a steady quarter with a lot of headwinds coming through. Basically, while we did out about 53.5 million in Q1, the Q2 we have done a modest growth at about 2.2% in dollar terms at about 54.7 million. And 2.8% in rupee term to 452 crores approximately. While the EBITDA has given a marginal jump at about 0.2%, there has been some taxation effect and reduction in other income, which has made our PAT at about 10.1%. As it stands for the Q1 and Q2, it's gone in anticipated lines, and we see good traction in terms of the order book, the nine wins, which have come in to close to about $6 million. Speaks significantly in terms of where we are proceeding in what lines, and the sectors continue to contribute. Basically, is retail and commerce leading the pack, and retail, BFSI, transport, and healthcare contribute about close to 80% of the contribution. While it is so that there has been some slackening on the receivables, which we have trying to push around, which has probably impacted a little bit on the cash flow. However, the utilization has gone up to its peak at about 82%, and we expect the gross utilization at about 84%, including on-site offshore put together. The resource mix for between on-site and offshore has been at an optimal level at about 79 and 21. And the top 20 accounts on the mining side, which has contributed has moved up and worked with our strategy. And the top 20 accounts have contributed about close to 54% of the revenue. And there has been a continuous endeavor to track and monitor in terms of the top 40-50 accounts. And one heartening factor is that on the digital push, while on the digital engineering side, we have done, our contribution has been at about close to 6%, but if you look at the digital assurance as a business coupled with the digital engineering, I think we have clocked on the total revenue, 72% is coming out from the digital side. So a complete shift on the digital side, which is happening. And the board is pleased to announce an interim dividend at about 3 rupees per share, and which is unique of its kind in the current scenario. And while it is so, we have got about close to 300 crores plus in the investments in cash and cash equivalents, and earning a handsome return. And our capex has always been minimal and low and need-based, and we shall continue to monitor the position accordingly. And the order book, as it stands, basically for a trailing 12 months effective October, stands at about close to 176 million, and we have a lot of renewals coming through in the month of December, and we are optimistic that we should be able to pull it through at least to 95-97% of the renewals, as we have not got till now in terms of any pushback. So overall, I think while the cautious watch and the headwinds have come through, we are seeing, as Srikanth mentioned, that we are seeing the tech spending has started commencing, but however, the effect of it shall probably be seen in the quarter Jan to March, and we continue to be cautiously optimistic. And with this note, probably I leave the forum open for a question and answer session. Sorry. Yeah, I just stand corrected, and then I invite Vinay to give a market commentary on the business. Over to you, Vinay.
Thanks, Krishnan. Can you hear me?
Yeah. Yes, we can hear you, Vinay. Please go ahead.
Okay, good afternoon, everyone. Once again, I think as far as the revenue, margin and order book is concerned, I think Krishnan gave the commentary. I think I just would like to mention that we continue to execute well and capitalize on the demand environment, especially when the customers actually were leaning into productivity and cost initiatives. Most of our customers actually continue to show their trust and confidence in us. At the same time, we actually were, I think, very formidable in our holding on to our positions in our customer places. Many places, in fact, we consolidated our position in certain new accounts where, relatively speaking, larger deals actually got capitalized, and these deals certainly will help us in the coming quarters. I think most of the financial parameters have already been spoken, so I look forward to the question and answer for now. I'll hand it over back to Krishnan.
Yeah, thanks, Vinay, and I will now invite Raghu, our Chief Delivery Officer, to talk about the technology offering and the customer management. Over to you, Raghu.
Thanks, Krishnan. I think this quarter has been great also in terms of delivery front. Like, for example, we have the highest customer satisfaction ratings in the history of Cigniti thus far. So we continue to better at serving our clients and measuring on what value we deliver. We also got some industry certifications specifically to domains related to, for example, like automotive industry. We got our TSAC certification. We also got our DEV CMMI Level 3 certification done. So therefore, getting some industry endorsement for the capabilities that we have built in. Operational excellence, you already heard Krishnan and Srikanth speaking about the improvement in EBITDA and the highest utilization levels with which we are operating. We continue to make significant inroads in digital engineering with 9 logos added, as Srikanth was mentioning, and most of these were also in our existing clients, which shows our capability to expand in current accounts. We are continuously investing in Gen AI capabilities, launching centers of excellence in that area that will allow us to further foray into the digital engineering services. And 2 large deals added into our kitty in this quarter based on our solutions and capabilities. Again, beating significantly large players in the marketplace tells the value that we are able to put into our solution to the table. So overall, it's been a great quarter, and we look forward to continue to raise the bar in the subsequent quarters. Over to you.
Yeah, thank you, Raghu, for that update. And I now invite Sairam Vedam, our Chief Marketing Officer, to give his commentary on the marketing aspect.
Thank you, Krishnan. So, we have had a stellar quarter on the brand and the recognition and the positioning per se. One, we got quoted again as the leader by Everest in Specialist Quality Engineering Services report, and also as a strong performer with star rating for customer delivery excellence in the Everest report for Next Gen QE. On the digital engineering front, we have grown strength to strength. We've been ranked by ISG in different segments across the digital engineering as an emerging product challenger, which is a testament for our recent pivot into digital engineering. And Gartner's refresh report of application testing services have once again covered Cigniti, and most importantly, that's a big endorsement of our twin positioning of a quality first digital engineering with digital assurance and digital engineering. On the vertical side, retail, CPG, life sciences, wealth banking, and digital banking services across the analyst data. I think thanks to our delivery excellence, we've been voted with significant ratings. And before I close up, I'm also glad to let know that we've won the first ISG's Case Study Standout Award for an AI/ML work that we did for one of our clients. And last but not the least, application modernization recognition from Forrester. And Cigniti has been voted as the best tech brand for 2023 by Economic Times Edge, which is an all-round endorsement of the strides that Cigniti has been putting together. And on the generative AI front, we are glad to let know that in the first ever report that HFS Research published, we've been voted as a disruptor, and that's the start of the journey to continue to what Raghu said in the world of generative AI, where we are also working upon. And we've also partnered with NASSCOM's GenAI Foundry to look at the innovation that we can bring in. So that's the update overall from the marketing and the brand positioning aspect. I'll hand it over to Krishnan.
Yeah, thank you, Sai, and for the brief update on the marketing side. And I invite Veera Reddy, our Global Head HR, to comment on the manpower and the related aspects here.
Thanks, Krishnan. Hello, everyone. A very warm welcome. From HR point of view, Q2 has been very good, low attrition and high engagement levels. Our focus continues in the DEI space and learning and development this year. As part of it, we have actually collaborated with universities and curated a program to bridge the gap between industry and academia. So we have successfully trained 55 resources from colleges in Hyderabad in automation testing space. So the idea is to bridge the gap between what they learn and when they come to office, reduce the lead time to start into the projects, etc. So we'll continue. We want to invest as we move forward into that space and then increase the number next year. We are also expanding our office space to cater to the increase in people coming back to work. H2, we aim to bring more people back to office while we continue to support hybrid working as necessary without impacting day-to-day operations. So overall, very optimistic with respect to how we are going to be with respect to people, attrition, and engagement levels. And thank you very much for this opportunity. Back to Krishnan.
Yeah, thank you, Veera. And I think now we open the session for the question answers for investors to move ahead.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ravi Naredi from Naredi Investment. Please go ahead.
Sir, thank you for giving me the opportunity. Mr. Shrikant and Mr. Krishnan, I draw attention of resignation of MD, Mr. C.V. Subramaniam. Never saw things where MD resigned with immediate effect. So what will you want to tell?
He has stepped down for personal reasons.
But it is a diplomatic answer, I understand, but never saw any MD resign personal reason with immediate effect. So what is the thing would you like to tell us?
At this stage, we can only gather that it is for personal reasons, Mr. Ravi.
Because you are escaping things and this is diplomatic answer, I am not satisfied with your answer. Thank you.
Thank you. The next question is from the line of Parth Kotak from Alpha Plus Capital. Please go ahead.
Hi, thanks for taking my question. I have 2 questions. One, if you could help me and give me some flavor on new client wins. If I'm not wrong, last quarter you said that client wins were good, but getting order executions from new clients was a bit of a challenge. Has that changed, and probably some commentary on the same? And second question is your guidance on EBITDA per se. I think you've mentioned in your call that we are at an optimum mix of onshore versus offshore. If there is further chance of increase in our EBITDA margins, that's all from my side. Thanks.
Yeah, I'll ask Vinay, can you take down the first question and talk about the new clients and the execution challenges? While it comes to the... Yeah, please go ahead, then I can answer the EBITDA question.
Yeah. So our new client acquisition in this particular quarter definitely actually has been better. We are, as Srikanth mentioned right in the beginning, that I think we are seeing sort of green shoots at this point of time of demand. The demand environment, which actually was existing earlier, was predominantly driven by productivity and cost initiatives. I think there is a little bit of loosening of purse, if you will, that we saw. Nevertheless, there were opportunities which actually we certainly came across where, as I said earlier, that relatively speaking, there were large deals, especially the two clients which Srikanth referred. They were completely new clients, and the deals which actually we have struck with them are sort of sizable deals for us, which actually will impact our new business for coming quarters. So, in a nutshell, I would say that the environment for new business for ourselves actually has become better now.
Yeah. So when it comes back to the EBITDA, in terms of question, I think if you look at resource optimization is one area. The other area, what we are trying to look at it is that while the resource optimization has been optimal, we are trying to look at in terms of the mix, in terms of the kind of resources, what we are trying to look at a pyramid correction, which is a continuous process is one thing. And the second level of lever, what we are trying to look at it is that if you see the skewing in terms of offshore coming through where the margins will increase. And a third portion is that there is also, there are accounts where we have started selling on the digital side, which has started yielding and will continue to yield more. If you see the full-blown year, probably will start yielding margins more. So definitely with these three and a few other cost economy factors, obviously our EBITDA, we are optimistic that the next 2 quarters the EBITDA should move up the value chain. Hello?
Yes, sir.
Yeah, that's all from my side. Thank you for answering both my questions.
Yeah, thank you.
The next question is from the line of Aditya Java from AKA Capital. Please go ahead.
Hello.
Yes, sir. Aditya.
Am I audible?
Yes.
Yeah.
Please go ahead.
Yeah. Thanks for the opportunity. I have a couple of questions. One is related to, there has been a speculation that promoters want to exit. Can you throw some light there? And the second question is regarding 1 year, I understand the outlook. Basically, if I see last 2 to 3 years, we have hired, like the employee strength has gone significantly up, which gives us an indication that there is a good demand for our projects. But I wanted to understand from 1 to 3 years perspective, where do you see Cigniti going forward, and how would be the growth potential, and where do you want to scale the revenues and the margins? These are my 2 questions. Thanks.
Okay. Yes, Prabhu, the first question, there's no discussions on promoters wanting to exit, so we deny that speculation, and if there is any such activity, it shall be informed to the related authorities, and it will be uniformly distributed to all the shareholders. So we deny the speculation. What was the second question?
The second question is 1 to 3 years outlook on Cigniti's growth and profitability.
So we don't provide guidance, but we have some internal benchmarks that we've set for ourselves to continuously execute upon. So in general, we don't provide guidance.
Okay. What would be the levers? Where are we guys focusing on? Some qualitative indicators. Can you provide that? What are the internal targets are fine? It is not on the guidance, but what are the targets keeping in mind?
So see, generally, we've been known as a software quality assurance player. So we've pivoted to digital assurance. Our ambition is to significantly tilt our revenues towards digital engineering services. So with our 200 plus clients that we have today, we have immense opportunity to proliferate beyond digital assurance as a service offering and go to offerings such as data, AI, ML, cloud, and so on. So if you are able to achieve, if you are able to execute upon this strategy, we are looking at a significant amount of growth.
So when you say digital engineering service, what kind of service can you explain here?
So in our parlance, it is outside anything outside digital assurance. So we look at ER&D services, we look at data, AI, ML, cloud. So anything outside of digital assurance constitutes digital engineering in our terminology.
So basically, IT consultancy projects, normal projects, not insurance assurance related. Basically, not testing related, it will be development related, right? If my understanding is correct.
Yeah, I mean at a very high level, yes.
Okay, then since the company basically is the specialized in quality assurance, do we are having the right capability of employees to execute the development, because that is a totally different volume, right, on the using the development?
Yes, you're right. So we've started on this journey more than 18 months ago. In fact, we've also done one acquisition, and we're continuously investing in areas beyond digital assurance. So that journey has started, and in fact, if you've listened to the commentary, we've talked about our new client wins and expansion into our existing clients outside of digital assurance. So
currently, how much of our revenue comes from digital engineering?
The digital engineering portion is about 6% of the total revenue, which if you look at the first 6 months of 108 million, 6% is digital engineering. And the digital assurance piece is put together, digital assurance piece and engineering put together is about 72%.
The rest comes from?
The generic testing.
Okay. Okay. So where do you see this pie moving forward in the 3 years?
Significantly, though we don't quantify the numbers, but I think if you look at, let's take a 5-year view from here. On a 5-year view, we expect the entire digital services, which is including the digital engineering, driving the growth at about close to 60%, and the digital assurance all put together, we should be there at about close to 80% or so is the wishful thinking.
Okay. 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 Thank you, sir. Thank you. Wish you all the best.
Thank you. The next question is from the line of Darshit from Robo Capital. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir. Please go ahead.
Very much. Yeah, go ahead, Darshit.
Yeah. Thanks for taking my questions. So, first of all, I just missed the order book, quantity. What was the number?
I've given for October to March as a combination for next 12 months. I've given it about 176 million as a confirmed order book.
Okay, 176 million. All right. And I get that you don't give any guidance as such, but would it be correct to assume that the past some time would have been an embodiment of what we are going to see in the future, like some similar kind of growth?
So if you look through the guidance, what we have talked, not guidance, what we have talked in generic in March, basically we said that the headwinds are there and Q1, Q2 remain subdued. However, we are optimistic on Q3 and Q4. So if you look at it on a apple to apple basis, if you look at it over the last 2 years in terms of what has been the growth and comparing to that for the current year, I think that's not a wishful thinking for the current year, because the year has been under consolidation both at the client side and also service provider side. However, we remain positive and buoyant for the current year in terms of doing a positive growth, which could be a double-digit growth. But I think what remains to be seen is over the next 3 years, I think the visibility looks good.
All right. Okay. Okay. Thank you so much and all the best.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Praveen Sharma from Sharma Investment. Please go ahead.
Yeah. Hi. Am I audible?
Yes, sir.
Very much.
So thank you for taking my question. I had a couple of questions. First is I wanted to understand how is Cigniti differentiating itself from competitors in the digital assurance and engineering services space, and what investments are being made in R&D and innovation to maintain a competitive edge?
Yeah. Saira, can you just give?
Yeah. So I'll probably take the first piece. So as I outlined, we have evolved from being a specialized testing services company to a niche provider of digital assurance, as acknowledged by all of the industry analysts that I spoke about. Our differentiation comes in an integrated ability to be a quality-first provider, number one. Our IP-led opportunity creation in sense of IP-led platform-led innovation, where the two platforms that we have, notably something called Blue Swan, which is an intellectual property of Cigniti, which also, considerably adds to our domain-led capabilities of testing applications of medium to extremely large complexity at enterprise level, which again I sort of reaffirmed with various analyst positionings that recognize that, backed by some of the labs that we invest and build out in our Hyderabad campus, plus the global array of the delivery, competent workforce that we have, which again is a reflection of the recent leader positioning by Everest Research and Gartner's refresh as a pure play digital assurance player, are notably the differentiators as far as our assurance capabilities are concerned. And similarly, our approach to digital engineering, where we are again bringing a new approach called a quality-first approach to digital engineering, backed by a significant amount of work that is underway in increasing our capabilities, whether it is in AI, whether it is in digital, whether it is in platformization, whether it is in cloud, is a work in process, or whether it is in data. I think together, that's a significantly called out differentiated approach, which is also called out by IDC and ISG in the digital engineering quadrants. So that's our differentiated value proposition. And also our Blue Swan platform and Zastra, which is our new platform, both have been, one Blue Swan got a Stevie's Award for its low-code innovation. Zastra has been recently the finalist in the Graham Bell Awards for computer vision. I think these are our emerging platform capabilities. Maybe I will request Raghu to see if there is anything else that he wants to add. Yeah.
Yeah. So coming back to the R&D in terms of the spend, I think it's a continuous evaluation process which is done by the Chief Delivery Officer in consultation with the business and marketing clearly. We have, as a budget, basically, we have budgeted very clearly that it will be not exceeding 5% of the total revenue to be absorbed in the P&L during the year in which it is being spent. But I think these spends, though budgeted, are being monitored and spent on judicious basis to really get the dollar return for the money spent very clearly.
Okay. And now to move a little bit over to the geographic side as well, to understand the revenue breakdown, I believe North America and Canada contributed significantly to the revenue. So could you discuss the performance in these regions and any strategies for further expansion? That is one. And secondly, what initiatives are in place to increase the company's presence in UK and Europe and the other world regions?
Yeah. I can give the quantification of the number, and I will request Vinay to come in and talk about the business strategy in terms of the North America and the European region in terms of the footprints. In terms of quantification of the numbers, I think this quarter contributed about close to 83.2% from the US and Canada region, and the UK EU continues to contribute at about 8.5%, and the rest of the world about 8.3%. Vinay, I invite you to talk about the strategy in terms of expanding the footprint, especially UK and the European region, and the specific strategy on the US side.
Sure. So, as far as our geographical strategy is concerned, as you know, the largest outsourcing market actually continues to be North America, and this market is still large enough for us to to provide a very healthy organic growth continuously. We implemented a go-to-market strategy last year to actually increase our footprint in our existing accounts, and we believe that we have a lot of headroom to grow within our existing clients, which actually exist into, of course, North America and North American market. So we'll continue to invest into this market. We reported earlier that we actually have started a nearshore delivery center in Costa Rica, and that proposition is very attractive to our customers, especially in North American geography, where they want same time zone delivery capability. We do continue to deliver services from our Canadian delivery center in Toronto. So overall, I think this market, North American market, continues to be heavyweight and will continue to drive our organic growth. Coming to the newer geography, we believe that I think remaining focused on certain markets actually will give us better return on investment. However, having said that, we may expand into Eastern European market and predominantly driven by the customers. Like our Costa Rica facility actually was driven by one of our anchor customers, and then we started offering that delivery center capability to our other customers. So is something which actually we will do in European market. I think the markets which we continue to be present do have significant headroom for growth, and they continue to provide us enough market potential where we believe that organic growth which we are targeting for ourselves will continue to come in. So in nutshell, we will be little resistive in terms of opening new markets. However, we will consolidate our positioning into like UK, especially UK market where we have sizable presence, and Eastern European, which may be driven by the customers.
Okay, that answers all my questions. Thank you for taking my questions, and all the best.
Thank you. The next question is from the line of Sanjay, an individual investor. Please go ahead.
Hello, good evening. Am I audible?
Yes.
Yeah, very much, Sanjay. Good evening. Yeah, please go ahead.
Yeah, good evening. So during the last quarter conference call, it was announced that you are cautiously optimistic because of the market conditions. So after this one quarter, are you seeing the things have changed or improved compared to last quarter? And when it was announced that the company will grow by around 14 to 16% in FY24 compared to FY23, are we on track, or are we seeing that because of the tailwinds or headwinds, the things will change or improve? And the third question is about the Q3. Are we seeing any impact of furloughs this time more than last year, or how the quarter looks like compared to, like, revenue will be higher than actually the Q2? Some guidance for at least better than Q2, or Q3 will be better than Q2?
Yeah, gentlemen, I think I'll sum up all the questions into a cohesive answer very clearly. Is that one? Sorry for repeating. I think we don't give any specific guidance, but I think we have already indicated very clearly with the kind of buoyancy this year in terms of a lot of headwinds running through, a double-digit plus growth could be idealistic order of growth. If you look at it for Q1 and Q2 comparing to the industry standards and average, I think we have delivered much better performance in the overall scheme of things. And what we expect, if you look at it for Q3 and Q4 also, is that the order book specifies, and from the current set of quarterly run rates, what we see basically is that we see a positivity across. I don't think I'll be able to talk beyond that in terms of how the growth, how the things moves up. But I think when it comes to the question of business, I can categorically say that there is no denial from the client, no deferrals from the client, or no price reductions from the client. These three are real positive measures clearly. So why we should not be able to achieve a better growth in the next 2 quarters? But I think we'll have to wait and see basically as we are moving up. As of today, things look very positive for us. And as alluded in the commentary by Srikanth, is that the tech sector spending has commenced, the tech sector spending, and then we expect this spending to really get into a full-blown proposition to really start falling on the lap of all the service providers, probably from effective the calendar year beginning January. So overall, I think the summary is that while the cautiously optimistic position is changing, and we are trying to be a bit more optimistic in terms of where we head over the next couple of quarters.
Yeah, thank you. Thank you very much for the answer.
Yeah.
All the best for next.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Siddharth Nitin Soni, an individual investor. Please go ahead.
Yeah, good evening, and thank you for taking my question. So, I guess it was mentioned in the opening remarks that BFSI, retail, e-commerce, these were some of the sectors that contributed significantly to the revenue. So, could there be some more color provided on these, on the performance and prospects of these particular sectors? And also, just to follow up on that, any particular plans to, further deepen, diversify into other industries to reduce the dependency on any particular sector?
Good question. I think if you look through, probably we are today the broad-based in terms of providing services. Our contribution from the respective contribution from each segment, which I'm going to talk to you about 4 or 5 segments, will give you clearly that where we are, how we are balanced. While our retail and e-commerce we do at about 23%, our BFSI contributes 22%, and travel and transport, hospitality and entertainment at about 16%, and healthcare at about 13%. So I think we are widely spread in these 4 areas as a specialist, and we are trying to give a push on the energy and utilities side to get us to the level where we are expecting that close to 70-75% of the business is focused on these five sectors. And I think it's a clean approach, and it's been working very well, and we are penetrating deep, and especially with the digital services running through in these clients, and these clients are long-standing clients, and where we are expanding in the breadth and width. So I think to answer your question is we have learned from the past in terms of post-corona that depending on a single sector heavily, especially on the travel, has made us face hardships, and we have de-risked and built our capabilities, and we have put it widely into these sectors clearly, which inherently for our growth, I think these 5 sectors has got the potential to really contribute more.
Okay, fair enough. And just one last thing to follow up on the same lines. Which vertical do you think will perform likely better than compared to the current or last year in terms of contribution?
So as it stands, if you look through, basically the retail and BFSI continue to contribute better. It all depends on the company's offering capabilities and the penetration, basically. While the entire industry talks about BFSI being on the downside, I think we have been specific and focal on specific banking sector, where we have started penetrating based on our offerings. So we are confident of these 2 sectors contributing a bit more compared to previous quarter.
Fair enough. That's it from my side, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Shrikant Chakikalam for closing comments.
Thank you. Thanks everyone again for joining in, and it was a pleasure to give all the updates of the company's performance. We intend to do this again in the following quarters. Thank you and happy Diwali.
Thank you.